Today, we've experienced history. President Trump just unleashed the biggest wave of capital the crypto market has ever seen. He's opened the doors for trillions of dollars in American retirement savings to go straight into Bitcoin, Ethereum, and the rest of the crypto market. This is the moment everything changes for the entire financial system. And at the same time, one of Wall Street's top analysts has put it out there. He's projected a $16,000 price target for Ethereum. So today I'm gonna break all of this down for you and what you and I can do to actually seize the moment, to actually capitalize on this before everyone else realizes what just happened. So let's zoom out a little bit. If you've been following my channel, you know for several months now, we've been watching Wall Street dip their toes, just dabble into crypto. Treasuries racing to stack ETH and ETF inflows hitting records. But what just happened in Washington that I was telling you in my intro is completely different. With the one stroke of a pen, okay, President Trump just made it possible for every American with a 401k, so think of your parents, to get exposure to Bitcoin, Ethereum, and a wave of other digital assets. So imagine being at your day job, setting your retirement allocation, deciding how you want to manage your retirement. And with one click now, you're able to stack crypto alongside stocks and bonds. This is truly an extremely rare moment in history when the world's slowest money, you could say, and safest money is suddenly has exposure and has the green light to buy what used to be considered too risky for the mainstream. It's the trigger moment for capital rotation, a shift that could take ETH to $16,000 far sooner than anyone expected. So let's hone in on this. Let's talk about what this executive order actually entails. President Trump, as I said, he signed this executive order that gives the green light for private equity, real estate, cryptocurrency, and other alternative assets to be included inside American 401k retirement plans. This is the first time in all of US history that digital assets are officially retirement approved. We're talking about legal, regulatory backing at the highest level, straight from the Oval Office. So we really have to sink into the magnitude, what is actually encapsulated here, what this actually means. Because about $12 trillion, nearly 37% of the entire US stock market is locked up in retirement funds. So with this one move, a slice of that mountain of capital can start flowing into Bitcoin, flowing into Ethereum, and into the top altcoins, and on autopilot every single day. The mechanics are simple but extremely powerful. Retirement plan administrators can now offer crypto as a legitimate allocation, and this means passive flows, monthly contributions, just like with the stock market. And the story and the potential of this has been circulating since July. But today, President Trump has made it official. And what's even crazier is that this executive order isn't the only force about to send Ethereum and Bitcoin to levels they have never seen before. What's happening on Wall Street in the Treasury arms race is just as huge. And it's all happening and playing out at the same time. So let's talk about this new Wall Street arms race, because right now the world's top investors and treasuries have quietly gone all in on ETH. We're witnessing a modern gold rush, a full-blown arms race to stack as much Ethereum as possible before the price runs away. Wall Street legends like Tom Lee are leading the charge too. He went on CNBC and publicly called for a $16,000 Ethereum, telling every serious investor in America to allocate at least 20% of their portfolio to ETH and crypto. He's putting real conviction behind those words. And you have to remember, he's not just anybody saying this. He's the chairman of BitMine, which has a long-term goal to own 5% of the total ETH supply. And they're moving at breakneck speed, buying ETH 12 times faster than Michael Saylor ever did with Bitcoin. Tom Lee was actually the first Wall Street analyst to take crypto seriously, putting a $55,000 price target on Bitcoin when it was still trading below $3,000 in 2017. And back then, most of Wall Street laughed at him. Now, every time Tom Lee speaks, the people managing the biggest pools of capital on Wall Street, they listen because he called it early and they act. So when investors hear him call something or speak about some investment with conviction, they listen. So when he says Ethereum is about to become the backbone of global finance, it's not just a hot take for TV. It's the signal that the next wave of institutional money is already lining up. And it isn't just Tom Lee. All over Wall Street, there's a visible arms race as corporate treasuries and institutions quietly stack ETH. BitMine's ambition is to own 5% of the total supply, and this is just the beginning. We also see SharpLink Gaming just raised another $200 million to grow its ETH treasury as well, which already sits at $2 billion. Wall Street giant Standard Chartered is now calling Ethereum treasuries very investable, he said. And why would they say this? Because their entire model is about staking ETH. Staking it and growing ETH per share every single quarter. That's become the new benchmark. On every earnings call, you're hearing analysts ask, how much ETH did you add this quarter? Right now, 7.2% of all ETH is locked away with treasury companies, ETFs, and long-term wallets. That's over $30 billion, with a significant chunk getting put to work in DeFi and on-chain yield strategies that ETFs can't access. And all this demand for strategies will create even more value for ETH as the network's usage goes up from the billions that will be deployed on the network. So we see investors are willing to pay a premium for companies that do this right. The NAV multiple, aka MNAV, which is the ratio of a firm's market value to the ETH it actually holds, is very important to pay attention to. And currently we see that all of these ETH treasury companies are above a 1x multiple of their ETH treasuries. So this tells us that Wall Street is pricing in future growth, yield, and the belief that ETH is becoming the foundational layer of global finance. And with each quarter, as more ETH moves off the market and into these corporate treasuries, the available supply is shrinking. And when this level of conviction kicks in and hits, it creates, and it will continue to create, a feedback loop. Investors chase supply, price runs, and suddenly everyone's scrambling to get exposure to try to buy some before supply disappears. But if you think this is just a Wall Street story, you're missing the real action playing out on chain and in the charts. So let's talk about what smart money's doing right now versus what we see in the headlines. We know that right now, the media keeps churning out headlines about volatility and about sell-offs. Meanwhile, we know in crypto, the real action is happening where most people don't look or don't know to look or just don't know how to interpret what they're seeing. And that is on-chain and in wallets and in the activity we see happening on-chain where the money's moving. Right now, we see that in the last month, retail has been selling ETH into every dip, okay? Like the 99% has just been worried about all the red candles and the negative stories they read in the media, and we can't blame them. They just don't know any better. That's why we have to bring them here to my channel so I can help break it down for them and we can all learn together. But as I was saying, if we do track what's happening on chain, you would understand and you would see that there's a totally different story happening. Right now, there are large holders. So think of institutions and like corporate treasuries and newly funded wallets. They are all quietly accumulating ETH at a pace we've never seen before. Since July 9th, just 14 new wallets have amassed more than, get this number, 850,000 Ethereum, with many of these buys routed through over-the-counter desks or OTC at Falcon X, for instance, or Galaxy Digital. The latest data from CryptoQuant tells the story in numbers. It tells us the retail share of ETH supply keeps falling, while large investors are soaking up everything they can get their hands on. So if we watch the ETF flows, we would see the same pattern. Inflows just hit new highs with more than 21.5 billion now parked in US spot ETH ETFs. And many of you have asked a lot, how do we know when smart money is moving? What does that mean? Well, here's the answer. When retail is panic selling, the institutional wallets are growing. That's your sign. The truth is, the people who get ahead in every single bull run cycle are the ones that spot these divergences before the price wakes up. You have to catch the wave before it happens. And that's right now. So unfortunately, the majority of everyone is completely sidetracked and distracted by what they see in the media. And that's why I'm so happy you're here, because you know that on-chain data shows the invisible hand is already stacking up the next leg, okay? The smartest money is ready. They're in position. They know this parabolic phase of the bull run of the altcoin season is here. So the difference comes down to mindset. Institutions treat these pullbacks as discounts, long-term entries that pay off when everyone else is still scared. Retail, on the other hand, or the 99%, gets caught up on short-term moves and emotions of fear-driven news. Over time, the split is exactly how market cycles work. Conviction and patience get rewarded. And just as smart money, these smart money investors are loading up on ETH, the technical setup is signaling that a major capital rotation could hit altcoins next. So let's dig into what the charts are showing us and why the biggest moves always start quietly during times like these when no one is expecting them. Now, shifting gears to focus on what will be the trigger for this altcoin season. We have to ask the question, if ETH is setting up for a $16,000 run, what does this mean for the rest of crypto? As the old saying goes, show me the chart and I'll show you the news. Here's what the charts are saying. The total 2, which is the chart tracking everything outside of Bitcoin, it just triggered a golden cross. That's the same technical signal that started the last major altcoin rally, launching over 5,000% gains. And at the same time, the Bitcoin dominance chart just rolled over with a death cross, the technical signal that has historically marked the rotation out of Bitcoin into full-blown alt season. And we see that the altcoin index is holding steady at 37. So if you're unfamiliar with this index and it sounds low to you, you should just know that it's exactly the same level we saw in early 2021, just weeks before the last monster rotation and pump in the market sent the market into overdrive. The crowd sees a sleepy market, but the signals are lining up for a classic quiet before the storm moment. So let's look at what's happening in the meme coin and launchpad world. We see platforms like Pump.fun, Bonk, and Radium all breaking revenue records, with Pump.fun now surpassing all other launchpads in 24-hour revenue. These are real flows, real trading, and they always show up just as capital is rotating into high risk, high reward bets. It's the same capital rotation sequence we saw in 2021. Downtrend in Bitcoin dominance, breakout, support, retest, and then suddenly a full breakdown as money flows into altcoins. So if you've ever felt like you've missed the big move in crypto, these are the moments that make all the difference. Acting when headlines are quiet, the charts are sending signals, and smart money, you notice that smart money is loading up on chain. Well, history shows that's when you want to be paying attention. And there's something even larger happening behind this chart action. It's not just capital rotating for Bitcoin into Ethereum, then into alts. We're seeing the financial system itself get rebuilt in real time, right on top of Ethereum. Tokenized stocks have exploded with market caps up 220% in just 1 month. This isn't just some fringe experiment anymore. It's the start of trillions of dollars moving on chain. The future is here, guys. So even if 1% of global equities go on chain, that's $1.3 trillion in opportunity. And almost all of it is landing on Ethereum. And the reason is simple. Ethereum has become the backbone of real-world finance for everything from treasuries to DeFi and now tokenized stocks. We see the most bullish macro setup of the cycle. The Fed is now expected to deliver 3 rate cuts by the end of the year. There's even talk of a 50 base point cut likely coming as soon as September, much more bullish than the 25 base point cuts markets were expecting just a few days ago. When you have falling rates and global central banks turning the money taps back on, that's the fuel for risk assets to take off. And crypto always leads the way. And here's where it gets even more wild. The last US Treasury auction revealed something no one can ignore. Foreign demand has dropped to a 1-year low, forcing big banks and domestic investors to fill the gap. If this keeps up, the Fed's only tool left is to print more dollars to keep the system moving. And every time the Fed hits print, Bitcoin and Ethereum catch a bid that just keeps climbing. Historically, this always kicks off the bull run. So right now, we see Bitcoin's price action is tightening inside a narrowing triangle. Volatility is vanishing, and the economic cracks are lining up for a powerful macro catalyst beneath the surface, stimulating everything. Meanwhile, American Bitcoin Corp, co-founded by Trump's son, Eric Trump, is merging with Griffin Digital Mining to list on NASDAQ, targeting more than a 15% of all US mining power and raising $220 million before its September debut. It's clear the Trumps now have the vested interest to see crypto grow and succeed. They are clearly doing everything in their power to make it happen. And frankly, we should all be so grateful to them. I don't care if they're super, super rich or become like even wealthier. I'm happy they are because they're contributing so much to the crypto market and to the world. This is the first administration, not to get all political, but this is the first political administration I've seen have tremendous and release tremendous news every single day. They make every day count. Truthfully, I find them very, very inspiring. And they're not perfect. I know they're not, but that's not what we're talking about here. Anyway, back to wrapping up the show today, guys, because we see that in today's executive order, it didn't just tweak a few rules. It unlocked trillions of dollars into retirement capital and gave Wall Street, Main Street, and every single American a green light to go all in on crypto. ETH at $16,000 isn't just a dream anymore. It's a thesis backed by the smartest, most connected investors in the whole industry. Today, we talked about and saw how Tom Lee makes the call. You watched the treasuries raise billions of dollars, and you saw and heard how the on-chain evidence is really backing all of this up. Every trend, every signal, and every macro force seems to be aligning in this moment. The institutions have moved. The retirement funds are next, and the technicals are prime. The macro is providing the rocket fuel for the next leg higher, for the pump in this bull run we're all waiting for. In every single cycle, and I know I say this every single video, but it's because I have to. Every cycle, the ones who get rewarded, the ones who make life-changing gains are the ones who act early. Stay with the sense of conviction and do not get shaken out by the headlines, family members, or even friends trying to convince you otherwise. So what do you do now? First, you have to get clear on your own strategy. How much ETH, Bitcoin, and high conviction alts do you want to own before the flood really begins? So kind of like a race, you want to get locked into position and know what you're going to hold, how much money you can invest every month, how much money you're not going to invest, okay? Ideally, the way it works is you start off with a certain amount of money and you make it grow. And you always pay yourself back what you put in, and everything else you put back to work. That's the goal, okay? And then you pay yourself 10, 15% at a time. It's not financial advice, but I happen to know this is how most people grow their money. This is how I've done it too. So guys, that's a wrap for this video today. If you gained value, you learned something, I would just ask you like the video and share it with a friend or family member. Subscribe if you haven't already, and be sure to hit the little notification bell because it'll tell you when I drop a video. And most of my videos, almost all of the content is quite time sensitive, and I cover what's happening like as soon as possible. So it's for you guys. I'm not charging anything. I love you guys very much, and I'll catch you guys in my video tomorrow. Ciao.